In this week's episode of the Stockscores Market Minutes, we'll talk about stock market corrections and why fear of them actually leads to gains. We'll then do my regular weekly market analysis. We'll look at some stock trading opportunities with the Stockscores Market Scan and the trade of the week on QTT. Okay, well, welcome. This week I want to talk about something I see as a common problem among investors, and that is this fear of an impending market correction leaves them out of the market only to come in at the worst possible time. That is when there is this fear of missing out, and that actually causes markets to go higher than they otherwise would. It's the human emotion that drives the last leg of the upward trend. Fear stands for future events appearing real. Now, we imagine the worst to protect ourselves. It's built into our biology. Fear is really irrational. We overestimate the probability of bad things happening. Investors are constantly overestimating the probability of a correction. What ends up happening is these fear-based traders are sellers, and they end up getting left out of a lot of the move to the upside, and ultimately they become buyers in the future. It's that fear that recharges the strength of the buyers when the fear of missing out takes over. As the market climbs higher, they feel like, oh, I got to get back in, and it's that fear of missing out that pushes the market even higher. Corrections really don't happen that often. They happen when the market is surprised by something negative, but they're quite rare. And ultimately what we should do as traders is really just keep it simple and trade with the trend. When the trend is broken, then we can exit in anticipation of further weakness. All right, let's get into this week's market analysis, starting us off with the US markets. Here is the S&P 500 chart, 30-day, 60-minute chart, so obviously a very short-term time frame. And you can see that we broke out right there. Volume very light, of course. It was a holiday week, and we didn't have any trading on Thursday. We had a shortened trading session on Wednesday, and then very light volume on Friday. So although this is a nice breakout and the market looks pretty good, we should keep in mind that there's not a lot of volume behind this move. That will show up when we look at the weekly chart, and you can see there volume is very low this past week. But at the same time, we should not ignore the fact that the market has finally broken out and closed above that long-term resistance level. Now, some may call this a head and shoulders pattern. Doesn't really matter what you call it. What's important is that the buyers have pushed stocks to new all-time highs despite all of the fear of negativity, negative things happening in the world. The buyers are still there. And I think one of the reasons is that central banks are still pushing lots of money into the system, and that money has to go somewhere. And with lower interest rates, stocks are attractive. Investors need a place to put all that capital. Looking at the Russell 2000, doesn't tend to attract the capital the way the large caps do, and you can see that it has lagged the large caps. We're still well below the highs, but at the same time we are building some rising bottoms. We're going to have a challenge getting through this resistance level. I think we get up to that and then get stuck. So I think there's some opportunity in the small caps, but you have to be pretty selective. Moving along to the Canadian market. Here is the TSX 60, and you can see that it doesn't have quite as good of a chart as the S&P 500. We are stuck under that resistance level. This is a little cup and handle, and perhaps we're going to build a handle on the right side and then break out and play catch up with the US market. But for now, it's a little bit of an underperformer, largely because of some weakness in the oil sector. Looking at that longer term chart, you can see that we are still below that high. However, the TSX did make the first breakout to new highs. It has since pulled back, broken the flag. I think we will move back up toward those highs, get stuck there perhaps in the short term. But generally speaking, I do like this market longer term. It's just right now a little sleepy here in the summer. Looking at the TSX Venture, and certainly I would say a market in general to avoid. The hot sectors of the small and micro cap stock market have gone pretty quiet. A lot of money has just basically been parked into some of those cannabis sectors. Those sectors aren't doing all that well. And until we see a sign of life here, I wouldn't get too optimistic about this market. There will be little bits of strength that can come along, but be very selective with what you take off of the TSX Venture. Moving along to currencies, here is the chart of the S&P, or pardon me, the US dollar. And it had a good rebound week. We talked last week about how it was threatening a break of that upward trend line. Really did break that upward trend line. The fact that it bounced back here makes me think that we may just go sideways for a little while and perhaps build a little ascending triangle pattern as I've drawn there. And that would be okay. It builds a base for the next leg up, but that next leg up is going to find resistance at the highs from early in 2017. So I don't think there's considerable upside for the US dollar, but still doesn't look like there's a lot of eagerness to get out of it either. Canadian dollar, despite the strength in the US dollar, it actually finished up this week, and that's significant because usually if the US dollar goes up, the Canadian dollar goes down. But we shouldn't forget that positive pattern that I talked about in the last few weeks where we broke the downward trend line from a rising bottom. I do think the Canadian dollar more likely to go higher than lower. It's not going to happen overnight, but it seems like it started that trend after a break of the downward trend line. On to interest rates, and we still are in a nice upward trend for the bond market. We're a little bit above the upward trend line. You can see if I draw a channel there, we're at the top of that channel, which means wouldn't be unreasonable to pull back. That would mean interest rates would tick up a little bit, but generally speaking, we're in an environment where interest rates have been moving lower, and that is good for the consumer wanting to buy cars and houses and that sort of thing. Certainly supportive of the economy, which should ultimately help earnings and make people pay more for stocks. Here's the commodity charts. Gold, after that big run up, making a little bit of a pullback in a flag pattern. That's pretty normal. I would think that we could see a few more weeks of pullback, but ultimately if we can break to the upside from this flag pattern, and maybe it's next week, maybe it's in 5 weeks, I don't know. But if that can happen, then gold should make its next leg up. I think right now it's just digesting the recent gains, and if you are not in gold or gold stocks, wait for this pullback to run its course and then look for opportunity on the break of the pullback. Oil tried to have some strength this week, but ended up closing below its open, and it really is in this cycle of compressing volatility. We call that a pennant pattern, and I think it's going to bounce around in this tip of the pennant before it makes a good directional move out of it. And finally, the fear chart. Look at how low fear is. This, of course, is the ETN that's based on the volatility index. It suffers some time value decay, so the fact that we are at new lows relative to here is not really that significant. It's essentially at low points, and that is a sign that fear is not a factor in the market right now. So my outlook then, bullish on both time frames for US stocks, neutral long term for Canadian, but still bullish short term. I remain bullish on gold in both time frames, although I do think it's going to make a little pause here, and I am neutral on both time frames, long and short, for oil. Now, US stocks broke out to new all-time highs this week, but we shouldn't forget that it was on very light volume in a holiday-shortened week. Earnings season should demonstrate whether the breakout is real. We should see a pickup in the action starting next week as companies start to announce their earnings. Canadian stocks lag as oil struggles. Gold is holding up well after the big gains, but it may pause for a little while longer. And as I said, fear is low. All right, so let's do a stocks to watch section here. We're going to jump over to the Stockscores website and run a market scan that I like to do called action candle breaks. Action candle breaks are stocks that are making significant upside moves with strong volume against a downward trend. And I like to do this to find opportunities where maybe the market has ignored some stocks and then they surprise with something good. So I've just run that scan. There's only 8 candidates today, and that's to be expected because, of course, Friday was a very quiet day with low volume. But what I want to do more than anything is just go through these 8 charts and tell you not only what I like about them, but what I do not like about them. Now, I've got this on the weekly time frame, and that in this particular chart makes it a little bit difficult to see. I'm going to just shorten this to a 6-month time frame. In fact, we're even going to go shorter than that to a 3-month time frame. And the reason I would not consider this stock is because it is still below its downward trend line. You can see that if I was to draw a line across these high points, it would still be below that, and that's not something we want to do. UPL, similar situation. I just hasn't really broken the downward trend line yet. It's got some strong volume. Perhaps it's basing, but I don't think it's going to start moving higher. Stocks don't usually move higher until they've built a rising bottom, and that stock has a lot of work to do in that regard. TBP on the venture, really oversold, getting a little bounce on Friday with some strong volume, but I think that it's going to face a lot of resistance as there's still all these people here that own this stock at higher prices. They're not happy. The stock perhaps just overbought, or probably oversold, maybe makes a bounce back to the 45, 50 cent range, but then I think it's going to encounter some selling pressure and limiting its upside. Here we have Blue Knight Energy, BKEP. I don't know anything about any of these companies. I just trust the charts. But this chart is actually pretty good. You can see that we've had that sideways trading range for 2.5, 3 months, and we're starting to move out of that. And notice that the volume is picking up here. You can see the increase in volume, and that is a positive sign. Now the move started on Thursday, so Friday we had another 7% gain. Really Thursday, or not Thursday, it would have been Wednesday because the markets were closed Thursday. But Wednesday was the buy day. Now that it's up another 7%, I'd maybe wait for a little bit of a pullback, and hopefully it does that and then it starts to go up again. It's a little bit of a chase here, but still something to keep an eye on. TYME was a pretty active stock on Friday, but notice that this candle here is red, and that means it closed below its open. So it showed some strength in the morning, it went up and then on heavy volume, and then it came back to close below its open, and that's to be expected because there is resistance here as the stock is hitting up against this high or this trading range right around $1.50. All of those people have been losing money for a few months, and when it gets back to that price level, they're just happy to get out at break even, and that's why resistance is important to understand. OASM, again, we'll zoom in on this as a 6-month chart. Notice that the trading range on Friday went all the way up to just about $3.50 a share, but closed at $2. Very strong volume. And again, that means that there was some strength in the early part of the day, but then the sellers sold into that and kept the price down and ended up closing it below $2, or just right at about $2. And so that's not a good sign. When sellers are selling into strength, it's better to just wait for a second signal. We're almost done these, and then we will get on to the trade of the week. Here we have ORBC, again, long tail on that chart, and that's to be expected because there's resistance right here at just under $8. Price went up through it during the day, and then it came back to close below it, showing you that resistance is still valid at that price level. IPFF, this is an ETF that is based on preferred shares. I think if you're looking for something conservative, this is not bad. It's not very liquid, but it does break its downward trend line this week. Yield is pretty good. Historic yield is 4.97%, so it's got some potential. I don't think it's awesome, but if you're looking really for a conservative ETN, or ETF rather, to put some money into to collect some yield, worth considering, although I'd give it at best a 6 out of 10. All right, so that is that market scan, and just to take you through the thought process that I have when I'm looking at these charts. Now let's take a look at the day trade of the week. And I've grabbed this one from Friday. Friday was a pretty quiet day, but yet there was still some really solid day trade. Lots of candidates, actually. I was surprised at how many there were, given that it was a holiday. But here is the one that I've chosen to highlight today. This is QTT. The entry signal was right here on the action candle. You can hopefully see that little pink dot right there. That's what catches my attention, the volume coming in, the price action. That's the reason to buy it. And in this particular case, if you were willing to take $100 of risk on the trade, it would require purchasing 1,660 shares, which is $7,000 position. However, because this stock is over $3, you can margin it 3-to-1 as a day trade, which means your capital required is only $2,335. Now the stock ended up making a 4.3 reward for risk return, which is a $430 gain on that $2,300 in capital required, which represents an 18.4% return. Once again, showing the power of day trading because you get leverage and because you can find these stocks that move quite strong through the day if you look for these action candles that I've created. And of course, we have a service where I show you all those action candles. The algorithms run all day long looking for them. That's called the Active Live service. You can go to the Stockscores website and learn more about that. All right, well, that has been the Stockscores Market Minutes for July 8th, 2019. I hope you're enjoying the summer. I hope you enjoyed this video. If so, click on the like button, subscribe to the channel, and most importantly, trade well.